Hello and welcome to CryptoWeeklies. In this video, we analyze the recent market drop. None of the content is financial advice. Let's get started. So this is the performance of major crypto assets over the last 24 hours. Most of them are down, at least the major ones in the top 50 cryptos by market cap. Over the last 7 days, all of the gains that we had got wiped off. And now most of the performance over the last 7 days is negative. Last 30 days, still most of the cryptos are up. Over the last 90 days, again similar story. So this analysis or heat map is available under cryptoweeklies.com, link on the bottom of your screen, available to all under heat map section. Now that the price of the crypto assets again is down, we need to see it from a different perspective. This is price of Bitcoin. At one point rallied up to the 20-week exponential moving average, has now met with a resistance. Now it's back down to the about 90k level. ETH at around $3,000. Again, it's a sea of red over here. Bitcoin, in terms of the simple moving average, it's still nowhere close to the 200-week simple moving average, which is currently at around 57,800, almost 58k, you could say. By the time it gets to the 200-week simple moving average, if you were to extrapolate it, this could be somewhere closer enough to 65k, depending on when price meets the 200-week simple moving average in this bear market. Typically, when the blue line over here turns white, that's where serious accumulation related analysis makes the most amount of sense for DCAing into Bitcoin. You can see as the price comes close to the 200-week simple moving average, the asset becomes more and more lucrative in terms of DCA opportunity. That hasn't happened. In terms of the time weighted average price, again similar story. Again, although the time weighted average price is much lower at around 28k, you could see from cycle to cycle that has been more closer to the bottom. Again, price doesn't go below the time weighted average price, but more and more proximate bottom identification using the time weighted average price compared to the 200-week simple moving average, where the price goes significantly below from each cycle. Again, you can see in 2015 the price went slightly below the 200 week. In 2018 touched the 200 week. In 2022 went a lot below the 200 week. Also went below the 300 week if you were to add the 300 week simple moving average over here, which is over here in the green line. And first 300 weeks were not complete in 2015, but you can see in the 2022 drop the price went below the 300 week. Again, 300 week simple moving average, again is this time around that level is at around 50k. It wouldn't be too surprising if Bitcoin were to go below the 300 week simple moving average this time also. Coming to the SMA analysis, the SMA risk analysis of Bitcoin and then of ETH. Let's start with Bitcoin. Again, right now 20-week simple moving average, proportional and time adjusted risk is now at around 0.21. That means it's the second best time to DCA per this model. Again, whenever it's less than 0.10 or that is less than 0.1, that's when again DCA makes the most amount of sense. Historically speaking, whenever this is less than 0.1, again like it was even in shorter term in January 2022, although the price did go below that, there was at least one major counter trend rally below that. So for longer term bottoming related analysis, the DCA or regression based model for Bitcoin helped identify a clearer picture of if the asset is overvalued or undervalued. Whenever the price is lower than this gray line, at least in it from that perspective, like it did back in 2018 till about 2020, and again back from 2022 till about February 2024. This model helped identify a clearer picture whether BTC is in accumulation phase or in distribution phase. Right now the price is above the cutoff line, that is coming in at around 78k, so about $12,000 difference. The estimated bear market bottoms for BTC as it stands is again estimated drawdown in 2026 is around 48%, which is again in terms of the regression model, time weighted average model, and SMA risk. Currently, accumulation risk for BTC is at 1.48. That means the base case bear market drawdown is at around 48%. If there is something severe, more severe than that, like a non-recessionary but a severe bear market, the price could drop about 55% at around 40k. That could be the bottom. If there is a major recession, the price of BTC could go as low as about 32k. With that, I would like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.